Is tomorrow, but right now there are warnings things are about to get much worse for millions of Australian households already struggling to pay their mortgages. Smaller lenders, the Bank of Queensland, Suncorp, ME Bank and even the huge investment bank Macquarie have already increased their interest rates.
All eyes are now on the Big Four to see what they do. Many analysts say if they follow suit and raise their rates by 15 basis points, it would be enough to tip up 1 million households into mortgage default.
And Martin North from Digital Finance Analytics joins us now. Good morning, Martin, with not the cheeriest news of the morning, but it's one that you say people can do something about if they're given the knowledge. So a hike of 1.5% would see repayments on a $750,000 mortgage rise by $90 a month. You say that could very well be the tipping point for some people.
Yeah, so we measure mortgage stress. Let's be clear, we're not talking directly about default. So there are about 970,000 people in mortgage stress. That means they don't have enough income compared with expenditure going out to cover all of their costs plus their mortgage repayments. If those small increases, 0.15%, do actually come in, it will push more people over the edge and effectively they'll be going up towards the million. That doesn't mean they're going to default immediately, but it focuses in on the pressures on households. About 1/3 of all people with mortgages, owner-occupied mortgages, are finding it really difficult to make those repayments at the moment, thanks to flat incomes, rising costs, and now more rising mortgage rates. Put all that together, and it's a world of pain.
Now, Martin, the Reserve Bank says it's not planning to lift official interest rates. It's a huge bugbear of just about everybody. How can the banks, therefore, justify raising mortgage rates?
Well, the thing to understand is that the banks get a certain proportion of their funding not from deposits, but from the international capital markets. So they're exposed to what's happening with rates overseas. And thanks to the US particularly, but in other countries too, rates are going up. And so there is upward pressure on those funding costs. Now, they're flowing into Australia, so the local funding costs are going up here. And in addition, the tax changes in the US have actually started American companies pulling money out of Australia. So effectively, the combination of those two factors means that the cost of money for the banks has gone up significantly. Now, the question is, what do they do about that, right? Because they could sit on it and effectively let their margins get squeezed, which means their shareholders get less. They can steal it from depositors, and some of them are doing that, or ultimately they'll have to put it up for mortgage holders as well.
Even still, after the Royal Commission, we're still only halfway through that, could the banks really deal with another public relations disaster if the Reserve Bank is keeping their interest rates steady?
Well, it's a good question, but you know, the fact is that there are shareholders, people, investors in the banks, and a lot of those are international investors, large corporate investors, are looking for their banks to keep their returns up. So effectively, the banks are caught, aren't they? Because effectively, they'll either have to reduce returns to investors or put mortgage rates up for people with mortgages. And that's the dilemma that they have. What we've seen in the recent history is they've tended to want to continue to make those returns to investors, which means that depositors and mortgage holders are the ones who actually get carrying the can.
Yeah, it sounds pretty inevitable.
No sympathy here, Martin, for the banks, I'm afraid, but we do understand it. Thank you for explaining it to us, and have a good day. Martin North from Digital Finance Analytics. So it costs them more to get their money. Well, just knock a little bit off your profits, please, boys. I mean, it's not going to hurt you, is it?
Yeah,
it's hurting
indeed.
us.
Martin was very good. He explained it really well.
Didn't he?
Yeah.
It does sound inevitable, though.